Hey guys, and welcome back to Inside Investing, and today we're going to be giving you the rundown of the 2022 investing year. Let's go. So guys, as you know, DEGIRO also periodically puts out these different types of blogs, which you can find here under the knowledge tab. And then if you go to blog, this is one of the blogs they posted about a month ago. And we think it would be very valuable today to discuss with you what are the most relevant highlights of the 2022 fiscal investing year, I would say. Because actually having a better understanding of what happened throughout the year could also sort of give us some better view of what might happen in the future as well. And also just make sure that we do fully grasp and understand what happened in the last year. So this is on a month-by-month basis. So we're directly going to start off with the January mark. And as you can see, the US stocks did not start the year off strong, with the S&P 500 and the Dow Jones seeing their worst month since March 2020, and the Nasdaq having its worst month since 2008 actually. Apple actually became the first company to reach the $3 trillion market cap, which is a stupid amount of money to think about. But it's at least good. I think maybe in the future as well, we might actually start and buy a separate share of Apple as well. But of course, do know that since we hold the S&P 500, we already own a part of the Apple, shares, of course. And then Microsoft announces the plans to acquire Activision Blizzard for $68 billion US, which would make Microsoft the third largest video game company, which is actually quite insane as well. February. Brent oil prices surpasses the $105 mark, a level not reached since 2014, following the Russia's attack on Ukraine, of course. And then the inflation, which hit crazy highs, actually a 40-year high in the US. But I think this is a global phenomenon currently. So the inflation has been insanely high. Guys, by the way, if you're liking this video, don't forget to thumbs up this video. And also, if you haven't done so already, please subscribe to the channel to make sure that you're up to date on what's happening in the world of investing, I would say. And then what happened in March 2022? The euro area reported that inflation was 5.9%, the highest level since inflation data collection since 1997. Yeah, here in Europe, things have also not been looking too good, so it's insane. But then actually the gold prices rose above the $2,000 mark per ounce, which is then a very high level. And anxiety surrounding the oil market disruptions. So that's what you would see. Indeed, with these bigger market disruptions, you would see that people would typically then go back to the more well-known investing options, such as gold, of course. And then the US Federal Reserve, the Fed, raised interest rates for the first time in over 3 years by 25 basis points to 0.50%. This is, I think, when they started with indeed increasing those interest rates. And I think currently you still see that they have been increasing at one pace or another. And then in April, Netflix reported its first subscriber loss in a decade, and then directly after you would see that indeed Netflix, the value of the company did decrease after this noted loss for sure, which is kind of sad, but I think it's always good to think in the long term. If you, of course, do your own research, but if you're confident that Netflix will be a long-term a player in the multimedia sector, I would say, then this might actually be a very good point in time to buy it, because, well, a loss in subscribers means less money. It's actually a discount to buy shares for Netflix, so that's quite nice. The S&P 500 and the Dow Jones had its worst month since 1970. That's not nice. And this is also in April, is also when Elon started his whole plans around buying Twitter, which of course, yeah, you'll see, I guess, down below in this overview coming back a few times. Then in May, what happened in May? The tech stocks lost over $1 trillion in market value over 3 days trading. Yeah, that's very sad to see actually, guys, because we are also, of course, in the tech industry, and it's kind of sad to see that indeed so much money has been lost in just 3 days. But on the other hand as well, if you're confident in the market as a whole, then this might actually be a lovely discount that you get on your stocks, guys. The S&P 500 briefly dipped into bear market territory, and then the Fed increased the interest rates again by 50 basis points to 1%. Then entering the summer period, guys, in June, the S&P 500 entered a bear market. Stock prices of oil companies began to soar, which is actually, yeah, of course, because of the war as well, where we see that the prices of oil have been increasing, and that's why then, yeah, stock prices of oil companies increase as well. Stock split for Amazon, stock split for Shopify. Probably once they notify the public of their stock split, the prices directly increased. Afterwards, they might decrease a little bit. So it's these type of stock splits are nice to invest in, but it's nicer if, let's say 2-3 years ago, you bought an Amazon stock. That would be better instead of just buying it once they announced it. And then again, the Fed increased their interest rates by 75 basis points to 1.75. And then July, Tesla saw a drop in deliveries for the first time since beginning of 2020. Alphabet stock split, GameStop also stock split. Spotify hit an all-time low. And then the ECB also started raising the interest rates for the first time actually in 11 years by 50 basis points, 2.50%. Again, interest rate increase in the US as well. Reached parity for the first time. Yeah, that's quite crazy, guys. That the euro and the US dollars did indeed reach the parity for the first time in 2 decades. And then August, Meta was knocked out of ranking of the top 10 most valuable companies. The combined streaming services of the Walt Disney Company surpassed Netflix in number of subscribers. And then Tesla underwent a 3-for-1 stock split. Then the end of the summer, September, the British pound hit an all-time low against the US dollar. Porsche made its market debut, Europe's largest IPO in over a decade. And then we have something about semiconductors. Adobe wants to acquire Figma. And then as well, interest rates increase, of course. And October started, and then finally Elon completed the deal to buy Twitter, making Twitter a private company. And then Exxon's stock price hit a record high. Tech stocks experienced another sell-off. Meta was closed at its lowest level since October 2015. Stock splits and then interest rates as well. Guys, if you're, by the way, appreciating this quick recap of the 2022 investing year, then please give this video a thumbs up and subscribe as well if you haven't done so already. And then we're starting off with November. The Dow Jones rose more than 20% from lows in October, putting it in a bull market, by definition at least. And the S&P 500 as well, it rose by 5.5% after the CPI report was released, which is an indicator of inflation. This was the best first-day reaction of a CPI report since records began in 2003. Increase in interest rates, and then Apple's market cap topped Alphabet, Amazon, and Meta's combined, which is insane, guys. Apple, yeah, if you're a long-term tech investor, then yeah, you just need to have some Apple shares. Might be via ETF index funds, or also just separate shares would also work, of course. Apple has been a long-time go-to investment for a lot of people. And then the last month of the year, December, the Fed increased the interest rates by 50 basis points, ending up at 4.5%, and the ECB increased them by as well 50 basis points to 2.5%. So guys, I hope you enjoyed this little update of the market. If you did, then please give this video a thumbs up. If you haven't subscribed yet, then also do that, and then we'll see you in the next one, guys. Let's go.